how much mortgage can I afford based on my income? That's today's question. And oh, by the way, if you'll stick around to the end, I've got a money saving tip for you that when you finance your house, if you do it right, you're going to save at least $100 a month on your mortgage. So stick around to the end for that tip. So hey, Tom, I wanted to bring you into the conversation with our viewers here. Tom is owner of Market Line Mortgage. He's been in the business for a couple of decades. He really knows his numbers. So Tom, let's pick a scenario of a buyer somebody who's thinking about buying a house. Let's say they make $75,000 household income. Maybe there's one or two people working, but let's say the total income is 75 grand. Let's say there's $200 a month worth of minimum credit card payment. Let's say there's $150 in student loan debt per month. And let's say they've got a couple of car payments totaling up to, I don't know, $600 a month. How much house can that person afford? How much mortgage?
I would say the good news for our listeners is that a lot of times people can afford more home than what they think they can at the start point. So even with our given scenario of $75,000 a month in income with those three items, the autos, the student loans, and the credit cards taken out, that would still put somebody roughly in the ability to afford a house at about $325,000 on the loan amount. So down payment would be added on top of that. So roughly, let's call it a $350,000 house if you're going to put down toward the minimum side, or even upwards of $425,000 if you're going to put 20% down.
Okay, Tom, now let's say things are a little bit different. Let's say we've got that same buyer profile, somebody who makes $75,000 a year and somebody who's got, the car payments that we talked about. But let's say that they don't have the student loan debt and they don't have the credit card debt. Talk to me about what the difference is. How much can that person afford in terms of monthly mortgage payment?
That loan amount at $325,000 ends up going up to about $410,000 or $415,000. And so then again, you add that same kind of down payment on top, and now you're talking about a pretty significant purchase, $450,000 or maybe even over $500,000 for the person that's got 20% down.
All right, now let's say we're talking about a new school teacher, single, makes a minimum income. What about them?
So let's take maybe just an average scenario. Let's say maybe that they're making $45,000 a year. They only have one car loan. Let's call it $250 a month, maybe another $50 or $75 a month for their student loans, and maybe a credit card at $50 a month. Just to clarify on the credit card, it's just whatever the minimum monthly payment is. It has nothing to do with the balance or anything else. But that borrower, even at that profile, can still afford a mortgage somewhere in the neighborhood of $230,000. Add their down payment on top of that, so that puts them in the $250 to $260 range, depending on amount they can put down. And they can even get a little bit higher if we end up going with an FHA loan, because FHA will qualify them up to a little bit higher debt ratio. So it still allows that borrower to get a house in that $250 to $275 range pretty easily.
Hey, that's great, Tom. Now, let's say this person wants to escalate the payoff process. They want to get that paid off quickly. What can they do?
I would say that borrowers generally can do one of two things. One is, and I can help them qualify or get to the number of what this is, but they could say, hey, if I want to pay it off in 15 years, even though I'm going to lock in on the lower payment of 30, what payment would I need to make to pay it off in 15 years? That normally is about 1.5 times of the 30-year fixed mortgage payment. The second thing they can do is, if you simply would take your monthly mortgage payment and make one extra payment over the course of a year, that is as simple as dividing it by 12 and adding 1/12 of it every month, or one extra payment a month, and that will cut 7 years off of their payments. So that'll cut them down to about a 23-year payoff instead of 30. Hey, John, remember you said that you would show everybody how they could save an extra $100 a month.
Okay, Tom, I did make that promise. So at the beginning of this video, I said I was going to show you how you could save another $100 a month, at least, on your mortgage payment based on these examples. So what I want you to do is go to our next video, small mortgage banker versus big banks. Go there, we'll see you there, and you're going to see how you can save at least $100 a month on your monthly mortgage payment.